Good morning, everyone. I'm Gaurav from InCred Equities. Nifty continued to reel under pressure, and once it gave a breakdown from the rising channel pattern and closed below the 89 exponential moving average on daily charts. They were just not looking back, and in all this, the process, we have seen multiple supports being decimated. There's a lot of pressure in the broader market indices as well, individual stocks as well. So Friday was one day where the indices did not give you the right picture of what is happening around in the market, at least on the ground level. The ground reality was, though the indices were down 0.5%, 1% for broader market, many of the stocks were down 5%, 10%. And in last 1 week, we have seen tremendous correction sort of coming in the stocks. It can be taken in a positive way. It can be taken as a cautionary tone as well. If you talk about in a caution way, then it's a sign that there is some sort of capitulation happening. So the point to ponder would be the buying interest, at least from the retail and the HNI segment, was very muted when Nifty moved from 22,000 to 25,000 in a swift fashion. A lot of people were waiting. It was a time when the domestics and foreign institutions were lapping up the stocks. So if that is not the case, if the so-called perceived weak hands did not buy into the rally, I'm not talking about no buying at all, but not in an aggressive manner, then this selling is coming from the institutions. And that can be a case where we may see some more downside sort of coming in going forward. How do we take it in a positive way? Historically, when your stocks correct way more than your indices, that generally leads to a stagnation. The correction halts, there's some time correction, and then the uptrend resumes. We have seen that happening multiple times. This can be linked to the selling by FIs, which we have been talking about for a while now, that FIs have been net sellers for a while now. So maybe that is the case. There is some reallocation going around, because of Trump tariffs, whether certain sectors will feel more pinch going forward. Whatever the reason might be, there's a possibility of some reallocation happening, and that is resulting in selling pressure by the FIs. Another interesting pattern that has been found is in the weekly chart. So if you look at the weekly charts of Nifty, it has formed five full body negative candles, weak candles, red candles. The color might depend looking at the chart, but at the end of the day, five weak candles is what one can see on weekly charts. Now, if you go for statistics, there's no trading pattern as such here. But if you go with statistics, then whenever we have seen five consecutive red candles being formed on the weekly charts, that has usually resulted in either a long-term bottom or a short-term bottom. So going forward, we may see 1 or 2% fall because that is where the max fall was seen in the previous instances, at least in the last 15 years. So this has been a good case where we have seen a bounce sort of coming in. Interesting things ahead. Let us see if that actually turns out. The good part about history is it at least gives you an idea how and what one can expect going forward. And the bad part about history is every day a new history can be written, a new history can be made. So this might be a case that you have 6 weeks or 7 weeks of red candles. For now, if you look at daily charts, RSI coming to the oversold zone, it's below 30. So on that sense, it is oversold. Let it go below 20, it will become even more ripe for a bounce. Hourly charts, there are divergences that we are seeing in Nifty. So on and if you connect the dots, then the pattern that emerges is that we may see 1 or 2% fall, and then we may see a bounce sort of coming in. Whether is going to be a temporary bounce or a long-term bottom, it will be depending on how the time tells us the story. But for now, I think the selling pressure may get absorbed, and we may see a bounce sort of coming in. That will from my side. Thank you.
Investments in securities market are a subject to market risk. Read all the related documents carefully before investing.